We're going to do a brief video on GGB stock review, and we've got a daily chart up here for you with a 5-day moving average in green, a red-day moving average in red, a 20-day moving average in red, and a 200-day moving average in blue. Let's take a longer-term look at this stock real quick. This technically, I guess you could call this a penny stock. May of 2021 put in a high of about $7 a share, and broke down through the 200-day moving average here at about August of 21. Was in a bear market for a little while, rallied back up, became a slight bull market here, got up to 650-ish, a little bit more than that, $6.60, and then basically after a test of the 200, crashed through it and puts us where we are today, which is firmly in a bear market. The stock went down and made a low of $3.94 and rallied right back up to the 200-day and put in a top there at the 200-day of about $5.18. So this is a lower price stock that, as you can see, has been basically oscillating around the 200-day moving average since August of 2021, and it's still kind of doing that. It's not putting in your classic bear market move where it goes all the way down here, but it is a traditional bear market stock in that it's below the 200-day moving average and so forth. So it's been that way pretty much all this summer, and I think you'll notice this consolidation move here in the most recent month or so of August. It's consolidating around the $4.65 price, maybe a little higher, $4.75 price, trying to get some buyers, trying to get somebody to come in here and buy this stock. The 200 days gone completely flat, so that's not giving us a whole lot of help as to what's going on with this stock. The price is respecting it, as you can see here. We had a gap through it right here in June, came up and bounced off it, as I said earlier, in August 11th. So it is respecting the 200-day, but 200 days not giving us any idea what's going on with the trend of this stock, and that's really because this stock, if you look at it, has been oscillating back and forth in a massive sideways movement around $5.50 all the way back here till July of 21. So that's what's essentially going on with this stock. In the short term, if we take a look at it, it's below the 200-day, so it's a bear market stock. It's below the 20-day moving average, although just barely. And as we said earlier, it is moving sideways. You're getting a just ridiculous tiny little bit of up movement in the 5-day. So from a moving average perspective, this isn't giving us hardly anything. I mean, just look at it real quick. Flat, flat, almost flat. You know, these moving averages are not really helping us too much. I think what's going to have to happen to this stock is going to have to break out one way or the other. Today, we're getting, the reason we're doing this, we have normal daily volume on the stock of 16 million, which is really good for a price $5 stock. But today, already before 12 o'clock noon, we're up to 20 million shares. So there's a lot of interest in this stock. It trades, from the way I look at it, it trades fine. It doesn't trade in a crazy penny stock fashion, because it's not really a penny stock, but it's down there. It's a low price stock. But it's a nice trading stock. It's got a lot of volume. There's a lot you can do with it. But you really have to be realistic and say that it's still in that trading range right now of about $4.50. So, you know, you could play it both ways. You could say if it goes up, you might get shorted as it approaches the 200, or you could wait for a dip and buy it. But in any event, I don't think there's much I can tell you as far as expectations that you can't see just by looking. Your price target, if it rallies up, is about $5 roughly. If it goes down, you have risk probably down to $4 and maybe a buying opportunity around $4. But you got to be careful, because your low is at $3.94, and if it gets to $4, it's probably going to test that low. If it breaks that low, you have a shot at making new lows. I don't think necessarily a great shot at it, because we're in a bear market, but we're not in a heavy downtrend. We're in a sideways movement in this stock, trying to reestablish a new value for this stock, and it's been trying to do it here basically almost, you know, since the beginning of June. So I think the safe thing to do is kind of let this market trade and let it show you what it's going to do. If it rallies and gets above the 200-day moving average with support from the 20-day, then it may be a good buy and back up here into the $6 range. If it doesn't rally, this may be a dead money stock down in this $4 range. You know, it's hard to say, because we're establishing a sideways movement, but we're doing it at lower and lower levels. So you have to be careful. If it comes down to the $4 range, you really have to be careful, because it could break through and make a new low. I know that's not definitive, but that's the best I got for you right now, in my opinion, for entertainment purposes only. I checked earlier. We do not follow this stock at rbamresearch.com. I think probably because the price is normally too low. But we do follow 190 stocks. They come out every morning at 7 a.m. These are out for this morning, and as you can see, Apple's right here. There's a lot of zeros today, which means there's no recommended buy price from the algorithm today. These are all for entertainment purposes only, but you can see Apple has 152, 153, 154, and some change as buy prices. The way this works is if you buy today, you close out, worst case, at the prescribed holding period. So today, this buy one-day column would be buy today, close out the next trading day. So in this case, it'd be Monday. Today's Friday. Close out at a loss just before the end of the trading day, or take your profits as soon as you get them. So if you were to get in there today, assuming your own analysis said it was a good thing to do, you'd take a profit today. If you didn't get in there, you would close out at the end of Monday's trading session just before close. Same thing for the 5-day and the 20. If you did the 20, use your own analysis from use ARPs for entertainment purposes only. If you get in there today, hold for max 20 days, close out at a loss, and otherwise take your profits as soon as you got them. You can get all these for free at rbamresearch.com. Absolutely no credit card required. We cover 190 stocks, long onlys, and in addition, we cover the major forex pairs, long and short, crypto, long and short. BTC is what we follow for crypto now, and the most liquid futures contracts, long or shorts, before 7 a.m. Monday through Friday. There's a link in the description below for rbamresearch.com. You can just follow that, go sign up for free. Again, no credit card required, and check them out yourself every morning before 7 a.m. They're there all the time, but we update them before 7 a.m. Monday through Friday. If you like this video, please click the like button. If you want to subscribe, please do that. If you have a great comment on how we can improve these videos, we would love to hear it in the comment section below. Please remember that everything you've seen or heard on here, including our entry prices and our analysis, is for entertainment purposes only. You can't use it for anything other than entertainment. You have to do your own analysis, and you definitely trade at your own risk.